Welcome to Pip's Lab. In this video, we will be talking about the concept of ask price and bid price. From the image on your screen, you would see something like USD 1.1408 and 1.1409. 1.1408 is the bid price, while 1.1409 is the ASK price. Let's now get to what they mean. The bid price is the price that buyers are willing to buy, while the ASK price is the price that sellers are willing to sell. Please take note of these definitions. We will break it down soon. As usual, I would use what is happening around us to explain these concepts. Let's say you receive it 10,000 from a friend abroad, and you walk into a bank to exchange it, and the bank tells you that the latest exchange rate is, let's say, $1 to 9.5 CDs. They would give 95,000 CDs, equivalent to $10,000. Let's say the next day you walk into that same bank, you had an emergency and you needed to travel abroad, and you are requesting the same $10,000. And the banks now tell you that their own bank rate is $1 to 10 CDs. So you would now have to pay 100,000 CDs for the same $10,000. In this situation, here the 95,000 CDs is the bid price, while 100,000 CDs is the ask price. That's not the current dollar rate, it's just an example. So you see how the banks make their money. That is the reason why they would never want you to learn Forex. Foreign exchange is so liquid that it can change your fortune around in just a few months of trading. However, this monopoly of knowledge is being circulated among the elites. Let's come back to Forex. In Forex, the bid and ask prices work the same way. However, not as exuberant as the one banks exploit us with. The difference between these two in Forex is just in points. So the bid price is the price that buyers also in Forex are willing to buy, while the ask price is the price that the sellers are willing to sell. Here, buyers and sellers are not human beings. It's the market in this case. You buy from the market and sell to the market. So the meaning of the above is that when you place a buy order in Forex, it would activate for you using the ask price. Remember that the ask price is the price that sellers are willing to sell to you, who is the buyer. While in reverse, when you place a sell order in Forex, it would activate for you using the bid price. Again, remember that the bid price is the price that buyers are willing to buy from you, who is the seller. Let's relate it to our example of banks above. In the scenario I gave above, when you brought your $10,000 to the bank, you are the seller at that instant, while the bank was the buyer. So they gave you their bid price of 9.5 CDs to $1, because that is the price they are willing to buy. In reverse, when you come back the next day that you want to travel for an emergency, you now become the buyer, no longer the seller. You needed to buy dollars to travel urgently. Now the bank, in this case, became the seller. So they gave you the dollars at their ask price of 10, which is the price that sellers are willing to sell. Remember, they are now the sellers. Recall from the example that 10 CDs was the ask price, and it's bigger than the bid price, which was 9.5 CDs. Also in Forex, the ask is higher than the bid price, just like what we saw in the image above. USD 1.1408 and 1.1409. Thank you for watching. Make sure to hit that subscribe button and like this video. See you in the next episode.